Assalamualaikum warahmatullahi wabarakatuh. My name is Nadiatul Fatiyah binti Muhammad Rafi'i and my friend Nurul Afifah Majidah binti Haji Muhammad Hasrin would like to present to you about the traditional scholar in Islamic finance. We are going to talk about the introduction, historical overview about Islamic finance, development of Islamic finance, role and qualification of Islamic scholar, traditional scholars, and also the conclusion. So first, we are going to discuss about the introduction, which is based on the Islamic finance. Islamic finance provides financial services that aligns with Islamic law or Sharia, which prohibits several forms of interest, risky transaction, gambling, short sale, and funding of harmful activities. So this point explains that the Islamic finance follow Islamic rules, which means it doesn't allow things like charging interest, risking deal, gambling, short selling, or funding any bad stuff. It also required that parties adhere to principle of fairness, and the integrity of contract transaction must be based on genuine economic activities, and there must be a sharing of risks in economic transaction. So this points out the ethical consideration within Islamic finance, emphasizing the importance of fairness, integrity, and transparency in financial transaction. It also underscored the requirement for transaction to be based on genuine economic activities and for risk to be shared among parties involved, promoting equitable distribution of risk as well as reward. However, the third point discusses how Sharia scholars have been crucial in establishing Islamic bank since the 1970s. It notes that Islamic banking has become a major part of Islamic finance and has expanded in various countries. The importance of ruling issued by Muslim scholars, particularly regarding Islamic banking product, is emphasized. However, the passage also highlights a shortage of scholars in Islamic finance as a challenge facing the industry. In essence, it also highlights the significant role of Sharia scholars in shaping the Islamic banking sector and the necessity for more scholars in this field. Next, we're going to talk a bit about the historical overview in Islamic finance. So, based on the establishment of Islamic financial system, Muslim has established a financial system long ago that operated without the use of interest, effectively catering to personal and business needs. This system thrived during and after the height of Islamic culture. However, based on the global expansion of Islamic financial institutions, presently there are over 200 Islamic financial institutions worldwide operating within diverse economic and social contexts. Muslim communities have also formed companies to meet their financial needs while adhering to religious principles even in countries where Islamic banks are prohibited. The next one is effort to eradicate interest. Nations such as Iran, Pakistan, and Sudan are striving to eliminate interest from their financial system entirely. Other regions are allowing the establishment of Islamic bank alongside with the conventional one. Lastly, the adoption of Islamic finance in Western countries. Some Western multinational banks such as Citibank, Chase Manhattan, and HSBC have also introduced Islamic financial products to tap into the growing Islamic finance industry. So moving on, we're going to talk about the development of Islamic finance. The first one is establishment of Islamic financial institution. So this point discusses the early growth of Islamic banking through the founding of major banks such as the Dubai Islamic Bank, Kuwait Finance House, and Faisal Islamic Bank, which marked the emergence of Islamic finance as a significant player in the banking sector. The second one is the global standardization and organizational development. So this point highlights the establishment of international bodies such as the AAOIFI and also the IFSB, which aim to standardize Islamic financial practice worldwide. This organization set guidelines for financial reporting, accounting, and regulatory oversight to ensure that the consistency and stability in the Islamic finance industry on the global scale. The third one is expansion of market. So this discusses the initiative such as the IFM and also the ILM, which focus on developing standards for Islamic financial instruments and managing liquidity across the border. This effort aim to enhance secondary market activity and facilitate cross-border Islamic liquidity management, contributing to the growth and integration of Islamic finance into global market. And the last one is incorporation of Sharia principle. So this talks about how Pakistan integrated Sharia principle into its financial system, allowing profit sharing, finance business to operate according to Islamic law. This demonstrates the adaptation of legal framework to accommodate Islamic banking practices.
Next, the role and qualification of Islamic scholars. A Muslim scholar, often referred to as an ulama, is well versed in Sharia law. These scholars have impacted Islamic finance in two ways. Firstly, some work independently and aren't affiliated with any specific Islamic financial organization. Secondly, others serve on the Sharia supervisory committees of banks. This highlights how Muslim scholars or ulama influence Islamic finance. Some work independently, offering guidance based on Sharia law, while others serve on bank Sharia committees to ensure compliance with Islamic principles. Since the time of the Prophet, Muslims have employed ijtihad, which involve legal interpretation, to handle matters not directly covered in the Quran or Sunnah. This practice, which is ijtihad, has played a significant role in the development of fiqh, forming a comprehensive body of knowledge between the 2nd and 4th centuries after Hijrah. This talks about how, since the time of the Prophet, Muslims have been using ijtihad, which means interpreting Islamic law to solve new problems not specifically mentioned in the Quran or Sunnah. This process has been really important in building up fiqh, which is like Islamic law. Over the years, it helped create a comprehensive set of rules and guidance for Muslims to follow from the 2nd to the 4th centuries after Hijrah. To be recognized as mujtahid, scholars must fulfill specific criteria established by traditional legal authorities. First, ability to independently interpret Quran and Sunnah. This means they should be able to identify relevant passage and hadith for each issue they encountered. Secondly, proficiency in Arabic language and literature. A strong command of Arabic language and literature is necessary to understand the Quran and Sunnah. Thirdly, deep understanding of Sharia subjects. Mujtahid should possess a profound understanding of Sharia topics such as comparative fiqh, Islamic legal history, and jurisprudence. Lastly, the comprehension of Sharia goals. According to Shatibi, mujtahids must also have a thorough understanding of Sharia objective. This includes comprehending the goals of Sharia related to wealth, which is particularly important for those involved in Islamic finance. Next, we like to present 4 traditional scholars in Islamic finance. First, Imam Abu Hanifa. Full name is Al-Numan bin Thabit bin Zuta bin Marzuban, born in Kufa, Iraq on 80 Hijrah. He is a trader by profession and contributed a great deal in terms of financial aspects. He is also a silk dealer, established a successful garments business of a popular type of fabric at the time, which is known as khaz, a combination of silk and cotton. It profited him from learning about the traditional practices in the exchange and served a check on his valid teaching. Interest, which is riba, is one of the issues that Imam Abu Hanifa had to integrate, as he believed that interest can be conceded in some extreme circumstances. Second is Imam Al-Ghazali. Full name is Abu Hamid Muhammad ibn Muhammad Al-Ghazali, born in Tus, Iran on 450 Hijrah. Endowed with a comprehensive knowledge and saintly character, he is also contributed and accomplished and extend over diverse fields of learning and more likely to view on economic activities with emphasis on the ethical aspects. Much of Al-Ghazali's commentary and analysis on economic matters is found as his greatest work, Ihya Ulum al-Din, which comprised of 4 volumes, cited by Ghazanfar and Islahi 2011. Next is Ibn Taymiyyah. Full name is Taqi al-Din Abdullah Abbas ibn Abdul Halim ibn Abdul Salam ibn Taymiyyah, born in Haran on 661 Hijrah from a family of Syrian scholars. He authorized many books with assorted arguments and aspects of sufficiently in the economic field, discussing terms of the price issue, particularly on the equality of compensation and price fairness. He views money as the measurement of value and the medium of exchange. Lastly is Ibn Khaldun. Full name is Abu Zaid Abdul Ar-Rahman ibn Muhammad ibn Khaldun al-Hadrami, born in Tunisia on 732 Hijrah, one of the founders of the economic theory that is acknowledged by Western economists. He approached the study of a country's economy from historical and social perspective, in contrast to earlier researchers who tended to be normative in their thinking. He finds that the labor curve reflects a large number of fundamental economic ideas and conducted numerous theory on the principle of Islamic finance. To conclude, finance has long been a contentious topic in Islamic culture, dating back to the era of traditional scholars. Sharia experts, particularly the classical academics mentioned earlier, have played a pivotal role in Islamic financial innovation. They have also assisted many contemporary Muslim intellectuals in addressing various new challenges in the modern world. However, they face obstacles and must remain vigilant, informed, and responsive to market demands. Despite differences in viewpoints and approaches, these conflicts can be viewed as opportunities to foster expansion in the Islamic banking sector. That's the end of our slide. We apologize if our slide is not clear enough, and if you have any question, please let us know. Thank you for watching and listening.